This is why you need financial due diligence for apartment investments. Let's break it down. Understanding the financials of an apartment investment might seem daunting, but don't worry. We're here to make it simple. First up, revenue trends. Look at the total rental income, occupancy rates, and rent growth over the past few years. Is the income stable, or are there fluctuations? Stable income means a reliable investment. Next, expense patterns. Review costs for utilities, maintenance, insurance, and taxes. Compare current expenses with previous years to spot rising costs or areas needing attention. Now let's calculate the net operating income, or NOI. Subtract total operating expenses from total revenue. For example, if rental income is £200,000 and expenses are £70,000, then NOI equals £130,000. Easy, right? Review the rent roll for occupancy and rent trends. High occupancy rates and consistent rent growth are green lights. High tenant turnover, though, might be a warning sign. Key performance metrics are next. Calculate the cap rate by dividing NOI by the property's market value. For instance, if the property's value is £1.5 million and NOI is £130,000, then the cap rate is 8.67%. This shows your return potential. Don't forget the expense ratio. A lower ratio means higher profitability. It's all about balancing income and expenses. Finally, spot opportunities for growth. Identify units with below-market rents and consider small upgrades. Look at ways to cut costs, like finding better utility rates or doing preventive maintenance. Remember, financial due diligence is your key to smart apartment investments. Review multiple years of financial data, validate with market data, and consult experts when needed. With thorough analysis, you'll optimize income, manage costs, and make informed decisions. Happy investing!